You're tuned in to Agriculture Today, and we start our Friday show with a grain market update with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Thank you, Shelby.
Starting off our conversation on the grain market, first taking an overview of the current grain market factors.
Well, we had on October the 11th, a week ago Friday, the USDA October crop production and WASDE World Ag Supply Demand Estimates report. And numbers at hand now. We've the reports came back at that overall for U.S. corn that there's no diminishing signal yet on the size of the crop. Still, corn yields estimated 183.8, actually up a couple tenths of a bushel, and the size of the crop 15.2 billion. So you got that in hand. The soybean numbers just again, I think about 1/10 of a bushel lower. Soybean production 4.58, basically 4.6 billion, both large numbers. And we'll talk about that a little bit more when we get into specifics. But the point is, large crops, interesting prices in recent days have been pretty much sideways. You wonder about either at or heading towards a harvest bottom. If we're not there already, we had gotten pretty low lately. We'll watch what happens, but an abundance of grain around that's available in those markets. The wheat markets have a little bit of export movement. We'll talk about that also, but overall, no new hard numbers coming back into this market again until we get off into the November report, and I believe that's due out on November the 10th. So we have what we have right now, and with the market thrashing around, really domestic, not a lot happening domestically. If anything happens, Guy, it's probably going to be in the foreign world sphere on grain markets.
Yeah, there's a few things happening on that point, Dan. Start with the U.S. dollar has been on a bullish run since the 30th of September. We've had up days every day since then. It's rallied over 270 points as we approach 104 on the index there, and that's been weighing on commodity prices as it makes U.S. grains more expensive. That said, U.S. Corn particularly, and to a lesser extent soybeans, are increasingly competitive in that global marketplace. The other issue I think is very important is a drop in the dry bulk index and international freight rates. We've seen that drop pretty hard in the last week or two. We're down about 1676 as of today's closes. Number of things happening there, a bit of waning demand, but also we're seeing a few missile attacks and rockets hit some grain ships there in the Ukrainian Black Sea ports, and that's significantly raised insurance rates, not only out of the Ukraine and Black Sea, but also we're seeing that across Mediterranean port insurance rates there as well. So a bit disruptive on that whole situation on that.
And if I can, and as you're talking about the transportation, a drought over there affecting both Russia and Ukraine crops, the impact of that gets exacerbated with these transportation issues that you're bringing up.
Yeah, look, there's dry weather we're seeing in a number of places around the world, not only in the Ukraine, Europe, and Russia, but also in Brazil particularly, and that's making a lot of people worry. Just going back to the transportation sector, we had the hurricane come through, what's that, 2 weeks ago now, put a bit of water in the Ohio River system, but the lower Mississippi River it's dropped back down to critical levels. We're seeing barge freight and restriction go up and restrictions applied as those levels drop. The biggest difference is we are seeing a bit of an export program start to build there, which is good to see that export demand come in. But that's also, that low Mississippi River is also raising rail car rates in the secondary market up to fairly high levels. And while I think most of the harvests were through on the soybean side of things, we still have quite a bit of corn harvest to go, and that's the big volume crop. And with the large side of the crop, there's a lot of country elevators out there needing to find some space, and their alternative space is, well, let's ship it on through, particularly to the export markets. But if transportation's expensive, that's sure not helping your local basis at your country elevator.
And taking a deeper look into our different commodities, Dan, starting on the domestic side with corn.
The corn balance sheet had a surprise in it, in that it wasn't so much that what happened this year, but it was a carryover from the grain stocks report on September 30th that kind of was baked into the ending stocks from last year. Again, the grain stocks available as estimated as of August 31st of 2024 ended up with about 1.76 billion bushels of corn, down about 52 million from where we've been, and that change again, now that stocks report had mostly to do with more feed use than had been anticipated. So raised feed use 40 million bushels. So brought that old stocks number into the old crop number into the new crop marketing year that started September 1, and ended up that even though with the yield increasing 0.2 of a bushel, the U.S. Crop size increased a little bit, about 17 million. You know, a marginal change. Still, the drop in those beginning stocks made a difference, and we ended up with. By the time we ran through all the changes, and a little bit of an increase in anticipated U.S. corn exports, which was a surprise also, although the pace had been pretty good still, that we dropped projected ending stocks for this 24-25 marketing year down basically to 2 billion bushel, had been about 2.05, 2.06. And that was enough to drop stocks to use from from 13.75 down to 13.3, and provided support for the market. So, and along with that, there were just minor change in the grain sorghum supply demand balance sheet, a little bit of a increase in exports, somewhat of a decrease in feed usage for the marketing year this just ended, brought that, and a little bit of another little bit of an increase in yields forward, and found ourselves at pretty much an unchanged but slightly higher ending stocks grain sorghum. So not a lot happening. Grain sorghum really dependent on exports, and I would wonder about grain sorghum exports really not responding until we have that crop out of the field, and then major buyers like China in particular sees bargains and goes for it. Guy, what about the international side?
Well, on the international side, corn was probably the most interesting thing. I will say I have changed my sentiment since I was here last month. I am wearing my Chicago Bulls hat today, which that's a bit of a reach for me to go out and have a view on that. Even though it's radio, I am wearing my red Chicago Bulls hat. But just the big news we saw on Wednesday was Mexico came into the market and bought 1.6 million metric tons on a flash sale, which was good. Same day we saw 332,000 tons of sale to unknown destination. More than likely, that's probably China. I didn't see a big market pop on that day, but it's just, I think, a good signal we are seeing buyers coming into this market, particularly at these historically low prices. I think we put the bottoms in there. Just looking at the USDA numbers for a bit of review, most of the changes were outside the U.S. From what I'm looking at. Coarse grains production globally was down 2.8 million metric tons to 1,101,000. That's 3 million more than last year. Still a pretty big number, but it was brought down. Non-U.S. coarse grains use was increased 2.8 billion tons. That's 17 million metric tons above last year's number. So we're seeing good demand continue to be in there, particularly from livestock sector and meat demand across the world. A lot of that coarse grains drop was in corn. 1.8 million tons of that was lowered, and that puts us below last year's global 23-24 number. That brings corn stocks down 1.8 million metric tons to 306. That's 6 million below ending stocks from last year. So we're tightening up the balance sheet. We're seeing good demand, and that's sort of lending to my more bullish views out there, along with dry weather we're seeing in a number of key growing areas.
Those key growing areas, I think we have about a minute left or so. Is that right? Key growing areas. USDA made changes in Russia and Ukraine in their corn production numbers, and that reflected on down. And you look at the world less China stocks to use. We were at two marketing years ago, the 22-23 11.25% down in this last marketing year by 11.13, and this year now again supporting the bullish statement you just made, that with the last number we're down to about 10.7% stocks to use for world minus China. So as long as we have grain in hand that we can get to quick, that just in time supplies, that may not do much to the market. However, when people get panicky, i.e. buyers get panicky, and they start to wrestle over available stocks, then you start to see more of a seller's market come into play, and we'll see where it goes.
Yep.
Dan, Guy, we're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by both of you as we continue our domestic and international grain market conversation.